Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today I was just scrolling through the comment section. I like reading your guys' comments. One of the comments was, I'm part of a trading group with some people I know. They're only interested in trading options. I've been outperforming just by doing nothing. I do say that quite a bit on the channel, where you get in, you take a position, and then literally you do nothing for a very long time. That's how you actually make money, is by doing nothing, by sitting there and just sitting on your hands saying, wow, this is great. This is a super long plane ride, pretty boring. And that's all it is. So the most important thing to do is to get the market conditions right and to get the valuations right. If you know that something is cheap and you enter whatever is cheap at that time, and then you hold on when the market conditions are right for that that cheap asset to appreciate, then you just do nothing. I mean, that's literally it. Now, I know we've got a lot of questions. A lot of people are asking, what are mortgage rates going to do to home prices? What are commodities going to do if inflation goes away? And there's a lot of ifs and buts and wins. And what I'll say is this: when I look at the market balances in a lot of these commodities, I don't think any sort of liquidity stop can fix this, unfortunately. And what I'm seeing is, like, there's going to be some good shortages coming up, and it does include food. It does include a lot of things. I don't know what 2024, 2025 is necessarily going to look like. That's when aluminum, copper, nickel, graphite, lithium, probably oil, uranium. I mean, all these things, they're all going to be in deficits all at the same time. And I don't know how, as a world, I don't know how you can invest simultaneously in everything. It's just, I don't know. I think that world's going to look a little bit different. I think things are going to be apportioned differently. I don't know how they're going to handle this. I don't know any of this stuff in terms of who gets what. If it's a pricing mechanism, if they start saying you can drive on X days, you can drive on Y days, you can only buy so much gas. I don't know. I don't know what's coming, guys. All I can say is that it is coming. And I know mortgage rates, they've gone up dramatically. And you know what? Let me pull up a mortgage rate here. Mortgage rates, 30-year fixed. And I mean, if you look at 30-year fixed in the blue here, it has been launching higher. It's gone from under 4% to over 5% in a very quick time. And I know a lot of people, they say, well, homes are not going to be affordable. People can't afford them. I don't know, guys. I don't have that answer for you. But here's the chart here. This thing's been a pretty fast increase, and it's been quite dramatic from the bottom. And it will affect affordability. I completely agree with it. Here's the problem, though. Does higher interest rates build homes? Does higher interest rates fix the problem that we're in? I don't think so. So homes are going to become less affordable. I completely agree with that. I just don't know how they'll go back down, because it doesn't fix the problem. Affordability doesn't bring homes onto the market. Last 2008 top, when we were looking at the 2008 top, what happened there? Well, homes became less affordable. Yes, interest rates did go up, not nearly as much as this. But we also had a bunch of homes and a bunch of inventory at the same time, all building in 05, 06, 07. We had over 10 months of inventory at the top of that. We built too many homes. We had a bunch of foreclosures. We had a bunch of bad loans, a bunch of things at that top. Now, as interest rates go up and things become less affordable, we don't have the extra homes. We don't have rent prices that are going down. We don't have inventory that's stacking up. We don't have new home builds that are stacking up in inventory like they did back then. So I don't think this is like 2008. Not even close. Completely different market conditions, in my opinion. But the affordability is getting worse. And I don't know how that's necessarily going to impact the inventory numbers. And that's what we're going to watch. We're going to watch it every single month. Subscribe to the channel. We'll watch it together. It's an important thing to the thesis because that's our liquidity coming into the system. That is our inflation. And they're obviously boosting this behind it too. They're getting stimulus. They're printing money. There's a lot of things going on behind here. And when I start looking at some of these charts, guys, and let me just pull up a couple. I was looking at this long-term inflation year-over-year chart, and it's stuck in my head. And I think it has grave ramifications to a lot of things here. And this is the United States inflation rate year-over-year. This is all the way back to 1920. 1920. They had a very high inflation rate of 24%. And then it dropped out with a crash. And then we had an increasing inflation environment from the bottom of 21 all the way to the peak of 47. And then we went into this lull consolidation period where we came out of that consolidation period all the way to 1980. Everyone knows this inflation rate regime in this area of the 1970s and up to 1980. Then we went into a very long, prolonged disinflationary period. We'll call that the Generation X into home buying years of a smaller demographic. The millennials are coming up, which is a larger demographic, pushing this up to the support line, resistance line. This resistance line, if we break this, I don't know what that necessarily means. Like we could have massive inflation breakout here where we launch to like 20% or 24% or some high number. I don't know what the number is going to be. Maybe we retest this 15% number. And remember, this is in new inflation rate calculated numbers, not the old 1980 numbers. This is gonna that's like a 30 or 40% inflation rate if we get up in this region up here of the old inflation, comparing like for like. So if we break this, I don't think this is going to be temporary. I think it's going to be persistent and for a while. I do, and every chart I look at, if I pick off like any chart, and I'll just use Southern Copper for example, some of these copper companies. They've got these long-term charts here that we've broken. We break out, we do a retest, and now we're heading higher. This is Southern Copper. It's one of my larger holdings for a copper company. And we're moving up here. That doesn't look like this is temporary. This looks like we are breaking from a base that was created in 2007 and broken in 2020. This is the consolidation period, which is slanting upward, which means it's ultra strong. We broke out, retested, and now it looks like it wants to run. That doesn't look temporary to me. That looks like it's a long-term 10-year pattern that's going to go, or 5-year or something. Something that's got some duration to it. And that this was just the lead-in, the big consolidation, and the big game is coming. This is the first wave, the pullback. Now, if I were to put a projection on this, if this was the first wave pullback and we're going to start a third wave, what I could do is I put a trend-based fib extension on this from the bottom to the top. And this is signaling on this big company that's paying us 4.6% dividend. If we go to 1.618 to a 2.618, we could go to $150 or all the way up to $214. I think in this wave coming up, like either here or up here, depending on how it happens. That's our Fibonacci extension lines. Now, this looks like wave number one, pullback, and then the third leg, the third wave of it. I start looking at some other things. And remember, if we break that inflation high, this is going to go berserk. Because inflation, all these commodities are priced with dollars in the denominator. And if your denominator is losing value quickly, these will maintain its value and probably increase its value against things like stocks and other assets. So this is, I think, an incredible looking opportunity in copper. Now, if I look at Glencore, Glencore has this massive bottoming pattern. We call it the booty bottom. Someone sitting down and creating a booty. Usually in a booty bottom, you come from the side down, you create a bottom, and then you rocket higher. This thing looks absolutely fantastic. Hopefully you guys got in when I was getting in on this right-hand side over here of Glencore. It's got a 3.3% dividend at the moment. Obviously, it's larger if you had bought in, down here. But this doesn't look like this is going to turn around anytime soon. This looks like it's going to run for a little while. That's why it created this pattern. That's why it broke this pattern. And they usually last for a good long time. It's not something that just goes up like to where it's at and then just falls back down. It's just the likelihood. I just don't see it in history very often. And if it does fall back down for some, we'll call it external factors, the thing that created this pattern is structural by nature, which means that the imbalances in the market exist irrespective of a war, irrespective of a pandemic, irrespective of all those things. And this will, I think, play out over time. It'll just be a short-term detour. And then I was looking at South 32. South 32 is another company. This is a booty bottom that's breaking to the upside. I'm seeing this everywhere. If I were to go to aluminum and pull up like CE, or here, potash, IPI, Intrepid Potash. Intrepid Potash is a potash company. And what does it have? It's got the bottom, the pulling on down, the bottom, and now we're heading on higher. You think this is just going to stop here and reverse? A pattern this large, something that created from $6 to $50 in this initial move higher, this thing, I don't think is going to stop anytime soon. It doesn't mean that we're going straight up. What it means is that it's going to last for a while. And when I see this size of pattern, when I see this type of movement, and I'm seeing it across everything, and you look at the inflation year over year that I was just looking at, this guy here, this is what I'm talking about. This almost feels like our dollar is about to get smoked, and everyone's positioning as such. That's what it feels like. That's what it's piecing together as. And I'm watching this to see if we break to the upside and if we run. We very well could. And whatever charts I pull up, they look absolutely ridiculous. Like here's CENX. Here's CENX. You got this big, I'm going to put it in logarithmics. You got this big pattern here. We've broken that to the upside. This does not look like it's a temporary move. We did a consolidation from 99. This was the lead-in, 99 to 2008. We did a consolidation, and then we're moving for a far bigger leg, I think. If that is the case, then we're probably going to see that inflation number break to the upside. And we could have bigger problems on our hands with currency type stuff. Lots of inflation, let's say, lots of inflation. And price increases of food, price increases of certain commodities, and all of the charts that I'm looking at say something on the lines of that. And I don't think, if I were to just come back in here, I don't think the housing market can necessarily stop it. I don't. That's liquidity coming into the system. That's what starts and kicks this all off. Agreed. That's what causes the rotation of money. That's what causes interest rates to go up. Yes, 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 yes. And if they're putting their foot on the metal, to the metal of inflation and stimulus and all this other stuff, well, that's just extra, cream on the top, I guess. But when you look at the market balances, you look at the deficits, and you look at some of these commodities, this is going to be a big bull market because the deficits are all a couple years ahead of us. These patterns that are forming everywhere I look, they're all supporting that viewpoint, in my opinion. You don't consolidate for 10 years and bust out of a large pattern for a year. It just doesn't seem likely to me. You break these big patterns, I call them the monster patterns, and then you run for a long time. Obviously, it's not going to be just straight up. It's not going to be easy. You're going to get some, goes up, pulls back and consolidates, pulls up, consolidates, pulls up, consolidates. And it's really boring. It is. It's a long plane ride. You're looking out the window going, man, are we ever going to get to our destination? You know, and we will. We will, and it will be a lot higher. And the way that you make money is by doing nothing. As you position in, these companies, just like I'm doing in the donations portfolio, how I laid that portfolio out, how I'm adding in uh, companies across a whole bunch of different sectors, and I'm just holding on. And I'm going to show you exactly what I do. I'm going to put it in the portfolio. I'm going to spread it out amongst a bunch of different companies, and then I'm going to do absolutely nothing. And you're going to see what that returns. And I'm going to, obviously, I'm taking obviously a risk by doing this because I'm showing you 100% honest upfront, showing you exactly how I would do it. And then I'll show you the returns of what's happening. And that's how confident I am in a lot of these chart patterns and the market conditions, the ratios, and the thesis of the channel. And it won't go straight up, guys. We're going to go up and down, up and down. It's how the markets roll around, and news is going to impact us. It's going to affect us. But I just don't. I look at all these things. The correlations are too strong across everything. The cycles are very strong, and I think that dollar, if we see a lot of these countries start pricing commodities outside of the dollar, I think we're going to see some big inflation, guys. That's kind of my take on it. Looking at some of these other things, everything just looks. It almost looks surreal. Like when I look at I'll go to one of my kind of, yeah, well, like even rare earth metals. I mean, everything in all of these charts, the booty bottom, the slingshot, the move higher. We're just sitting here ready to, just rip it. And then probably one of my favorite charts is the uranium to gold ratio, or the uranium to stock ratio. I love seeing these types of charts where you get momentum coming down. You get a consolidation period on the bottom, and now we're breaking to the upside. I mean, guys, this is just starting. And I don't know how to relay how like massive or how big this is. Because a lot of people, what they'll do is they'll look at the price that's right in front of them. They'll see it moving up and down like this. Maybe they mistimed their purchase. Maybe something happened where they didn't get it. They were chasing the price. They bought it kind of high. It pulled back on them. And they're like, I'm down. I'm getting frustrated. And the way that when I look at this chart, what I see is like the biggest opportunity that's about to come. Because when this bottoms, the momentum's going sideways. That's what the arrows are. Momentum coming down, momentum sideways, and the momentum, I think, is coming up. We've been declining in our purchasing power. Uranium has in relationship to stocks. Decline, decline, decline. And now we stop that momentum, and we're about to head higher. What that means is we're going to see a vast outperformance of uranium in relationship to the S&P 500. That's what it's suggesting. And the only way that you're going to benefit from all this is that you're patient and you get in when it's low and you just hold on. Man, this is a good looking chart, guys. And I come back and I look at some of these charts and I'm just like in awe. I mean, this one here, we were up at around 0.2 for uranium to gold, which means it was 0.2, so 20% of the price. Went all the way down, created this big bottom, and now we're starting to come back up. And I just don't see how this isn't going to play out. I mean, even if this were to like come up here and pull back, I still think we have to go higher because of the market deficits in the market. And wherever I look, I can't find anything that basically says that this isn't going to happen. I mean, almost everything I look at, here's the CRB index to S&P 500. And just everything I look at, it's like jaw dropping how everything's kind of bottoming out. And I don't think this is going to resolve itself in a year. I don't think it's just going to go straight up here. I think it's going to take some time to work its way higher over a 5 to 10 year period, or maybe even longer. But I'm just looking at all these things when I'm going through it. I don't know how to convey the opportunity that's ahead of us, so you guys can remain calm and figure, kind of have the confidence to hold through this. This is natural gas. This was a kind of a bull market, a consolidation period, and then we're entering a brand new bull market coming forward. And we're just entering the launch phase for natural gas off of its long-term channel. It's just breaking out to the upside. And like, I don't know if you guys just see this and then you're like, ah, that's no big deal. Like, so what? We broke out. Like, to me, this is like a big deal. Because, I mean, if you position, your savings, you position all your hard work, all that hard work that you worked for 10 or 15 or 20 years of your life or even longer, and you're going to put it to work. I mean, this here is like earth-shattering, paradigm-changing, information for me. It's like, wow, we're actually breaking out on top of the big boy pattern. This is it. This is the beginning of the move. And I get a lot of questions on how long is this thing? What's the exit strategy? How do we get out of this? We could sit in this for 10 or 15 or 20 years maybe. And we could see just absolutely ridiculous returns. So I don't want to be too quick to say, yeah, the exit strategy is XYZ, because that can change quite a bit in that time frame. So what I would suggest is, obviously become subscribe to the channel. That's what I would definitely do. Check out my website below, finding/value.com. Sign up if you'd like. It's up to you on what you want to do. And let's ride this thing together. Let's ride it together. I want to make this, I'm doing this. Like I've got my heart and my mindset that I'm in this and I've been in it. And I think I've got a lot of the right companies. And if we can ride this together, I mean, it'll be a fun ride, guys. And hopefully it'll keep us from poverty, because the world that I'm kind of seeing here and all the charts that I'm seeing, it's going to be a very difficult world to live in if this plays out the way that we're seeing it in these charts. And I don't want that to happen. I don't want that to be, but I can't change that. All I can do is I can go off of what I see. So I just wanted to sit there and talk to you guys about this stuff. I don't think it's going to be something that gets knocked off of its trend. It's going to have to be something absolutely major, and I don't think we have anything major in the pipeline that can stop this. So that's my my take on it. Give me a thumbs up, guys, if you guys like the content. Subscribe to the channel if you haven't. And if you want to check out my website, it's down there. You can sign up. $50 for a platinum membership, 10 for a silver. Platinum gets you absolutely everything. We are doing weekly meetings with the platinum members to go over questions. And if you're a platinum member already, I'll put the recording of this past meeting that we did today. I will put that on the website so you guys can view it and rewatch it if you want to. But we had a lot of very good discussions on a lot of different things. Mortgage rates, what are the best sectors? What are the companies that I'm currently looking at and buying? What does my portfolio look like? How do we set up a portfolio? What would the strategy be? What percent goes where? And obviously, I'm sharing what I do. It's not advice. I'm just giving my opinion. But you can get my opinion. You can ask direct, specific questions about my portfolio and what I'm doing. And I'm pretty open and free to discuss anything like that. So that we do have that every week. It's something that I think will add tremendous value to anyone who's looking to invest. All right, guys. I'll catch you later. This is Finding Value.